Hi guys, my name is Bilal. I'm here with Dan from GCC Mortgages, and today we are going to be covering mortgages.
That's it, yeah. Bilal, thank you very much for having me at Luxury Real Estate. That's right, isn't it? it's written on the cup. I was make sure I got that right. Yeah. No, thank you very much. So we're going to be talking about mortgages today. We're going to be talking about the different types of mortgages, what you need to get a mortgage, perhaps the documentation you require, just to kind of get everything in order so you have no surprises. Now, obviously, you mainly work in off-plan.
Yeah.
So that's one of the big questions that we actually get quite a lot is, I bought an off-plan property. Can I get a mortgage as well?
Yeah.
I know that's going to be one of the questions you're going to ask me.
Yeah, so I'm going to ask you some questions, okay?
Yeah.
Let's first of all start off with one of the main questions everyone is asking at the moment, which is, can you get a mortgage with off-plan?
The short answer is yes, you can.
Okay.
So you can. It does have to be completed to a certain amount, so usually 50% constructed, but then you can look to finance that last little bit.
Okay.
Interestingly, we've actually done one recently where someone didn't necessarily want to finance that last little bit in the more traditional way because they had other properties, and we actually took equity out of their existing property to then pay for their off-plan property in full. Oh. So there are a number of options.
Different options and different ways of actually utilizing a mortgage.
Yeah.
Okay.
Yep. It's not always one size fits all.
Right. So first of all, let's start off with the different types of mortgages products that are out there in the market. So what are the different types?
Well, so you've got your basic regular normal mortgage,
okay,
right, which probably everybody's heard. You put a certain amount of money down and then you leverage the rest from the bank.
Okay.
Maybe 20%, 40%. You've then got a buyout mortgage.
Okay.
Or refinance mortgage in other places we call that, where you've had a mortgage for 3-5 years. And then you change your mortgage provider to perhaps get a better deal. You've then got equity release. This is one of my favorite ones at the moment, which is what we just touched on a second ago, where perhaps you own a property and, because of the sort of the uptick in property prices over the last few years, you've actually got quite a lot of equity in your existing property and you can draw some of that out. You can use that for renovation on your existing property, or you could even look to invest in another property or something else. So those are the main
so you
mortgage
utilize
products.
The equity to purchase an off-plan property?
Absolutely.
Okay.
Yes, you can. Absolutely. And we do that all the time.
Amazing. So different types of mortgages. So we have the traditional, conventional / Islamic mortgage. Mm-hmm. We have buyout mortgage, and we have equity. That's the only products, right?
That's your core mortgage products out there. Yes.
So that's the core services. Okay. Now let's get into more detail in terms of checking people's eligibility. So run me through some scenarios. So for example, what are the loan to values typically for clients?
So I'll start on another side of things. So one of the main things we get asked a lot is how much, do I need to earn to be able to get a mortgage? And it does depend on the bank, but the minimum is about $10,000 a month.
Okay.
Ideally for a salaried employee. So that's kind of your absolute minimum. And with that, you can do an 80-20 mortgage. So you put a 20% deposit down, plus the other fees that are associated with that. And then the bank will finance 80% of that property.
Okay.
So that's your kind of straightforward, okay, I'm just coming in, maybe a first time buyer, I want to buy a property, I put my 20% down, I earn $10,000 a year, off I go. Okay, that's your basic one.
And then the loan to value, I believe, drops at a certain amount. Is it 5 million?
That's correct. Yes, that's right. So if the more expensive the property, essentially the more you have to put down and the less the bank will loan on it. Yeah.
Okay, and how much is the percentage? 5 million. So if a property purchase price is 5 million plus, how much is the loan to value?
30, 70, yeah.
30, 70, okay. So 70% loan and 30% down.
Exactly that, yeah.
Okay, perfect. And non-residents.
Non-residents. So this is actually, I would say in the last 8-9 months, something that has absolutely shot up. So people who don't live in the UAE, perhaps they live in England, looking to invest in Dubai. Okay. So looking at buying something either to live in, because there's a lot of people moving here from the UK and other places, or they're looking for an investment property. Not always an off-plan property. It could be, a ready property. you can still do that. So you're paid from your country. So you're from the UK, you've got a job in the UK, and you want to get a mortgage in the UAE. You can absolutely do that. And we do that a lot.
And what's the loan to value for that?
It's about 60-40.
60-40,
Yeah.
okay. Perfect. There's actually another topic that we just skimmed past. Well, actually, I didn't even ask you. It was, so 80% is for expats. There's actually 85% loan to value as well for locals, right?
Correct, yes.
So if you're basically a local Emirati, it's actually 85%.
That's correct. That's absolutely right, yeah.
Amazing. Something changed recently, okay, which is the fee financing.
Oh, fee financing, the what?
Fee financing. So fee financing, it doesn't exist anymore?
It doesn't exist anymore. So it actually changed, I think, in January, early February. So it used to be that, yeah, when you got a mortgage here, you could actually wrap your fees, so your broker fee, DLD fee, you could actually wrap it into the loan itself. You can't do that anymore. Okay. So it changed things. It's going in a way which is a good way, which things are becoming much more regulated over here. So you can't just say, oh, I'm going to wrap this into this loan. You know, you mortgage the property and that's it. Okay. There are certain banks that offer certain products now to help you through that process. So certain banks will give you a credit card to finance parts of those fees. Okay. And then the mortgage is separate altogether.
And then with the difference over here with the credit cards are you could actually finance the credit card. So you could, utilize the credit card and convert that into a loan, right?
Correct. You've got two different types, right? So when your money comes into your bank, you can change the bank so that your money goes into the same bank that provides your mortgage.
What's the benefits of that?
Well, what the benefit is for the bank is obviously they want all your money coming into them, but because you do that option with them, they might give you a slightly better interest rate. Okay. They might give you a break on some of the fees that you have to pay with them. Okay, so it can be quite a good deal to do it that way.
So what are usually the bank fees? So for example, there's processing fee.
You do, you're absolutely right. You've got processing fees, you've got valuation fees, you've got when you actually go to the DLD and go to the transfer and do it, you have to pay then for the registration fee for the mortgage.
So the government fees are basically standard fees, but the bank fees, which is the processing and the valuation fees, that's where some of the banks will offer promoted.
Absolutely, yeah. So different banks, exactly. It could be 50%, they might waive the whole thing altogether. And this is why when we get asked, okay, is it better to go direct or better to work through a broker? In the same way, why is it better to work with an off-plan agent rather than going straight to a developer, is that you get more options and you're given the whole landscape of what's actually available to you than if you just go straight to, okay, I'm just going to go to this bank here. They're only going to show you what they have. They're not going to obviously talk about all the other options.
So essentially you guarantee getting the best rates in the market.
Of course, yeah.
Unless the client goes directly to that specific bank that offers the best rates.
Absolutely, yeah, absolutely.
But in addition to that, you could still bring more value than going directly to a bank, right?
Absolutely. I mean, because, our whole thing, it's not just about the numbers. It's not just about, okay, go with this bank, they're the best. We help people right from the start, right to the finish. We essentially hold your hand, particularly if you've never done it before. If you've never got a mortgage before, regardless in the UK or here or wherever you're from, but if you've never had a mortgage before, working with a broker or working with us just gives you that peace of mind that nothing's going to be, you're not going to have any unforeseen craziness all of a sudden pop up. We're going to tell you exactly what it is from start to finish, from the timeline to how much you're going to pay to the documents you need. So there's nothing unexpected.
Now, okay, now run me through the actual process.
Oh my God.
So what is the mortgage process from, let's say, start to finish?
Okay, so we always recommend that before you've even sort of begun your journey of buying a property or whatever, run your credit. Okay, so go to one of the credit bureaus and actually do a credit check here. It's about 100 dirham or so, and it comes back in about 48 hours. And the reason I say that is now banks ask for it. They didn't used to, but now almost every bank is asking for a credit check before they go to final offer letter. So start with that, then get a pre-approval. Okay. So what is the pre-approval? That essentially checks that you are eligible for the loan that you're trying to get without actually getting that loan.
Okay, so what documents are required for that?
All your basic stuff. So you're going to ask, so what the bank does, it needs to determine that you can afford that loan and you're essentially a safe individual to loan money to. So it's going to check your salary, right? So it's going to see your personal bank statements. If you own a business, your business bank statements, obviously your IDs, your visa. It's going to check through all of that. Okay, we'll put everything together for you. We'll help you complete all the application forms. Then we submit that to the bank that we've talked about and we've chosen is probably the right one. And then they do the pre-approval.
Okay.
Okay. Once you've got that pre-approval, you are then safe to go, okay, now let's start looking at properties.
So you're essentially underwritten by the bank that they will definitely lend to you based on all your documentation that's been provided.
That's been provided. Yeah. And that, what you've just said there is really, really important. So the bank base that pre-approval on the information that you have supplied.
Okay.
And the reason I say that, because we've had this recently where someone said they were one thing and they were actually something else. So they said they were employed. So it went all the way through, they got pre-approved right to the point when they were at the final offer letter. So they essentially paid their money to a deposit down on the property. Yeah. And then it turns out they'd misled. Okay. So they weren't employed. They were actually, they owned their own business. Okay. So again, it's really important to be 100% upfront, give all the information that we need to get that pre-approval. Once you've got it, as long as nothing changes from that pre-approval time to the final offer letter, then yes, you are good to go.
Okay. And then what's the steps after that? So once you're pre-approved, they found the property.
You find the property. Yay, we've got something.
What's the steps like after that?
So the next step after that is we do the valuation.
Okay.
So the bank send out an independent valuation team. So you as the buyer pay for that, usually around 3,000 dirham. And again, some banks will waive that, some will waive 50%, it depends on the bank. The valuation is done usually within a few days of you signing your MOU. Okay, so you found a property, you're like, yes, this is it. Yeah, everybody's happy, you agree on a price, you sign the MOU, you start moving forward. We get the valuation done. Takes a few days. Once that's done, they then send that to the bank. The bank look at that valuation. Hopefully, it all matches what you're buying the property for.
Yeah.
Okay. And then they go, okay, great. This is great. Now we're definitely buying this property. Then from that stage, we're then moving on to the final offer letter stage.
Okay.
Okay. So timeline from you finding that property. So say you find it on the Monday, valuation done, hopefully maybe
within the week.
Yeah, that week, maybe the following week. Then the valuation going to the bank signing off on it. Right, then that's probably the next week. So now we're about 2 weeks from the point that you've actually signed your MOU. So you've got your final offer letter now from the bank. You go in and sign that. That's usually another 4 or 5 days. So you're probably we always say 4 to 6 weeks. If you say 4 to 6 weeks, 6 weeks on the long side, 4 weeks on the short side, that's roughly how long it takes to complete on a mortgage deal.
So it does take longer if the seller also has a mortgage, right? Because then you have to request for the eligibility letter.
Yeah.
And then the bank needs to go clear the liability. And then you have to wait for the clearance documents. So
absolutely
that adds probably 2 to 3 weeks.
2 or 3 weeks on top of that. Yeah. And so we've done one, the longest it took was almost 3 months. Okay. So it can take a long time. But here's the thing. As long as everybody is aware of the situation, as long as everybody knows the steps, the processes, and what's going to happen, then everyone's kind of happy with it, right? I mean, that's exactly the thing. If someone said to you it's going to take a week and it takes 3 months, you're going to be upset. But if someone said to you it's going to take 4 months and it takes 3, then everybody's happy. So It's all about, telling people the right thing.
Exactly. So I know we briefly covered on salaried, let's say 10,000 salaried. Let's talk about the self-employed side of things. I know a lot of investors or a lot of clients or individuals are moving to Dubai.
Yep.
Let's cover a lot of individuals that are moving to Dubai are moving here with their businesses.
Correct.
Okay.
Yep.
So let's say new setup company, are they eligible?
The short answer is yes.
Okay.
There's different aspects to it. So depending on where they're from and their kind of profile of their business, we would put them with maybe 1 or 2 banks.
Okay.
If they are, again, they don't have that profile that fits into that particular bank, we still have an option for them. And it might be that we can't give them the same LTV. So with this bank, it might be, let's say, I think it's 25-75. It might be that we have to do a 60-40. Okay. So there's still an option for them. They might just have to put a little bit more down.
So if they are essentially new to the country and they have a new business set up, let's say 3 months, 6 months,
Yep.
or let's say less than 1 year, because I know usually the bank's criteria for self-employed is, let's say 2 to 3 years. The bank just basically caps the lending from 80% to 60%, right?
Yes, that's right. So they just won't loan so much because, again, we talked about, what the bank's job is to assess that risk.
Yeah.
So they're going to look at it and go, okay, new business, great, fantastic. Hope that everything works out, but we're not 100% sure, so we don't want to give them all that 80%. We'll give them 60%, and you have to just put a little bit more down. It protects the bank as well.
Now, let's cover how do you actually do the calculations for a salaried individual.
Okay.
Individual.
Yep. So a salaried individual, rule of thumb, it's 84 times their salary.
Okay. 84 is 7 years.
Correct.
Okay.
Quick math. You've done that before.
So 7 times your annual income, essentially.
Yes, that's right. 7 times your
actually in the UK is 4.5 to 5 times. So
right.
The banks over here lend actually more.
And a better interest rate.
And a better interest rate.
Yeah. And it's a bit quicker as well.
What's the typical interest rate over here?
So right now, anywhere from 3.99 up to about 4.5, maybe even 5, depending on the bank, your profile, how long you want to do a fixed term, if you want to do a fixed term, that sort of stuff. So, but yeah, anywhere between that range.
So that's actually a good point what you said earlier about Dubai is better than the UK at the moment in terms of mortgage, because over here in Dubai, you get pre-approval, right? Pre-approval, you check your eligibility right at the beginning. Whereas in the UK, you just go to a bank's website and just do basic calculations, and then you check your eligibility and you get a pre-approval essentially done straight away without your documents actually being checked. And then you go through the whole process.
And then it doesn't match.
And then, it doesn't match. And then you might not be eligible. Whereas over here, all your documents are essentially taken, given pre-approved and assessed and then pre-approved. And then that's how you check your eligibility.
Yeah. And I would say, the nice thing about working with us as a small company is we're the ones that are physically looking and checking. We work with all the banks. So every single bank out there we work with. And we can look at your profile, and where someone else might say, you know what, we've got hundreds and hundreds of deals coming in. Now this one doesn't fit into the box. We're going to move on. We definitely go that extra step to chat to everybody.
And find a solution.
Okay. So I would say in the last year, there has been only one case that we haven't been able to do.
Oh, wow.
So just one case. And it was a very nice guy. I won't obviously say he was an influencer.
Okay.
And it just didn't match up. We just couldn't get it done. Okay. We tried for a long time. But one case.
Dan, if you've had any complications with your mortgage and you've not been eligible with your bank, contact Dan.
That's right.
And he'll make you eligible.
I mean, that's the thing. But we want to, the name of the game is, we want to get as much mortgages through the door as possible. We have some really good relationships with banks. There's 3 or 4 banks that we speak to personally every single week So if you are having trouble getting a mortgage, if there's a situation that it hasn't got done and there's nothing crazy, please do talk to us because we will try our best to help.
So in terms of fees, we covered processing fee and valuation fees. Is there any other fees that the bank charges?
Good question, Bilal. Yes, there are. So there are certain things that the banks will charge. They charge their own insurances.
Okay.
And sort of life insurance.
Okay.
All right. Now it's mandatory. So they'll add it on from their end. Obviously the purpose for this is protecting their loan. All right. So unfortunately, if something were to happen to the person that's getting the mortgage and they can't pay for whatever reason, they're covered. Okay. All right. Now, different banks have different rates, different percentages. It's based on the amount that you're borrowing. It also gets less and less. So obviously, from year to year, you're going to pay down what you owe the bank
on a reducing rate.
Exactly that. So every year it's going to get less and less. Some banks give you deals. Some banks actually cover it. Some banks will knock off the first few years. It just depends on the bank.
Yeah, it depends on the promotion at the time. It depends on what bank.
Which is why it's really useful to speak to a broker. So regardless if you talk to us, but it's really useful to speak to a broker because it's not just about the interest rate. People focus on that way too much. They go, oh, this one's 3.99 and this one's, 4.9. And that makes a big difference. But you're probably going to pay it off in 4 or 5 years, right? But when you look at all the other little bits that you're paying on top of it, sometimes they work out just the same. But this one, you can't make any overpayments on.
So it's good to actually sit down with you, go through proposal that you guys do and run the numbers exactly. Right?
Exactly. And it all depends on the client, right? We work with clients. Most of our clients are first-time mortgage buyers in the UAE. Could be an investor, could be an end user. But the product that we offer isn't just access to the banks, it's access to us. We'll come to you. We'll sit down in your office at home. You can come to our office. You can go and sit in Starbucks, and we'll explain that everything. All right. We'll open up the screen. We'll show you exactly what it is. Again, we're very transparent about it. So these are the 5 banks that we've selected. This one I wouldn't go for. This one I wouldn't. But these 3 here, for your purposes, for what you're trying to do, this one's got the best rate. This one's actually better on payments, blah, blah, blah. So that's the value that we bring, is that kind of really hand-holding service.
So rather than a client going to 20, 30 different banks and speaking to 20, 30 different people, they could come to you, one person, you have access to all the banks, they analyze all the rates, and then you offer them the most competitive across all the banks.
Exactly that.
So guaranteed.
Absolutely, 100%. The bank can't give a different rate than we have access to.
So now, let's say a client wants to, something's happened and they've got a big bonus, a big commission, or they've won the lottery. They want to close the mortgage.
Yep.
What are the fees? Because I know in the UK, I wanted to close one of my mortgages, and the fee just to close my mortgage was £15,000-20,000.
Yeah.
What are the fees over here?
Well, again, the great thing about mortgages in Dubai, and this is set by the central bank, is about 10,000 dirham.
Okay.
Maximum. All right. So if you close out your loan, that's all you're going to pay to the bank.
So it's 10,000 max capped.
Correct. Yeah.
So
it's capped.
Regardless of, let's say, if I have 5, 10, 20 million.
10,000.
Okay.
Yeah. And I mean, if you want an example of why that's so useful, but banks in other countries will want you to pay a lot more, like you just said, in the UK, in the US as well. The reason that's so great here is we've just got a situation going through right now where an investor bought a property. They bought it for 2.9. They've had the mortgage now for 4 months. They were looking at renting that property out, but the rental market's changed slightly and it's not going to achieve what he wants to cover his mortgage. So we're looking at selling that property now. The property has gone up from 2.9 to 3.4. Oh, wow. So we're now going to he's going to sell it, hopefully in the next week or so, going to close out that mortgage. It would have cost him just obviously those repayments, that little bit of fees he did at the front, and 10,000. But he's he's going to be very, very happy with that return. 400,000
to 500,000 dirhams in the last 4 months.
Correct. Yeah. Oh, tax-free, did I say that?
Tax-free.
Yeah. So, this is why investing with mortgages is, without question, I think one of the smartest things to do. You're leveraging the bank's money. Yeah. Okay. And that's so important. You're putting down your 20%, you're leveraging the rest. And now he's going to see the massive upside in that.
That's actually a good point because let's say, for example, in the UK, I would say 95% is mortgages and then 5 to 10% is cash buyers. Whereas over here, it's the other way around.
Yeah.
There's more cash buyers in the market than actual mortgages. I know in the last, let's say, a couple of years, mortgages have increased.
About 23% or so. It's
23 year on year, 23%.
Yeah,
that's
getting a
big increase.
Yeah.
And there's still a lot to go, right?
Huge amount to go. So you've got, obviously a lot of the mortgage buyers are first-time mortgage buyers. I think the largest is from the UK, and then the second is India. So and again, it's because a lot of people from the UK are used to having mortgages. They understand it, right? So they come here, I can get a mortgage, great. And in the last few years, it's got a lot more structured to get a mortgage here. And it's getting more and more structured, which is really good for the market. Okay, so people are coming in, they're moving here with their families, they're getting mortgages, they're leveraging the bank's money. It's really controlling, because when you have a valuation on a property, obviously you used to have these spikes in one tower, you'd have all these different spikes. Well, now it's kind of flattening that field, which is really good. It's gonna really control the actual market for ready properties, for secondary market. So you've got a lot of people doing that. Investors is still very low. So I think only about 5% of mortgages are for investors.
Wow.
That has to change. I mean, I've just given you an example of a pure investment deal where that guy has got a fantastic return on his money and he only put 20% down. He's made plus 400,000. That's great, isn't it?
It's amazing.
So
there's so much room for mortgages to actually grow.
And I think it will.
And different products to come in the market, because in the UK, there's buy-to-let mortgages.
Which doesn't exist here yet.
It doesn't exist here.
Yeah.
Imagine that comes over here and overtakes the normal mortgages.
Absolutely. 100% mortgage for a buy-to-let customer. That'd be amazing. So who knows? But things I would say, since I've been involved in mortgages here, things have changed every 6 months. A new product has come out. In fact, there is a new product that's coming out soon. It's been approved, but it hasn't come out yet. So no one really knows exactly all the specifications within that, but it's the first time buyers mortgage for certain developers.
Okay. Yes, that government initiative, right?
Correct. It's a government initiative for first time buyers. It's mainly aimed at off-plan property. Okay. So it's going to be rolled out. A lot of the big developers are rolling this out, but we're not really sure of when it's going to happen and exactly what it is. But you can register on the website and kind of get your name down.
Yeah, check your eligibility on the website. So essentially, it's a reduced rate, flexible payment plan, and a bit of help or ease on the down payment.
That's right. They spread the down payment over 4 interest-free payments.
Okay.
So you still have to pay your DLD fee, but instead of you having to pay it up front, you spread it into the loan. So again, it's helping. Yeah, it's just helping first-time buyers. But again, we're not entirely sure the specs of it yet.
Yeah. So it's been announced, but officially hasn't gone live yet.
Exactly. But it will do. I would imagine probably early part of next year, we'll all know exactly what it is.
Amazing. Yeah. Now another question is, what not to do when getting a mortgage?
Okay.
What can we tell our clients or advise our clients not to do while
that's a really, really, really important question, because you start looking at a property to buy, a few million, you're like, okay, I'm going to go ahead. And then you go out and buy a new car, or you get a few credit cards, and all of that will negatively affect your ability to obtain a mortgage.
Okay.
And one of the reasons is particularly credit cards. Cars are something slightly different, but particularly credit cards is here. They look at the amount that you have available to use, not your existing balance.
So not what you've utilized, what your actual limit is.
Exactly. So for example, I'd have a credit card and the bank say, here, you've got 100,000 limit. And you're like, great. Well, I only use 1,000 of it. I hardly use it. But that 100,000 affects your ability to get a mortgage.
So they stress test on 100,000, not your utilized amount.
Exactly. So on most deals like that, we have to have to ask the client to reduce it or get rid of it.
Okay.
We just did a big one recently where the guy had, I think, 4 credit cards, 2 car loans that he had to literally clear off completely.
If he wanted to be eligible,
which he did, and he got it done, and everything was fine. But yeah, it's a lot of work, So don't put yourself in that position if you don't need to. If you don't need that credit card, don't get it.
Yeah. You could always get the credit card afterwards.
Absolutely, yeah, of course.
Get the mortgage and then get the credit card.
Absolutely, yeah.
Okay. What else?
What negative things that can affect you?
Yes.
Obviously, the car we talked about there.
I actually had a case. Okay. We had a mortgage client.
Yep.
Okay. They bought an off-plan property some years ago, and 2 friends, 2 business partners, 2 friends, they bought a off-plan property, and once the property was ready, they wanted to basically mortgage the property. They weren't eligible because it was 2 friends.
I think you told me about this.
Yeah. So
yeah.
Tell everyone why.
Well, because so basically husband and wife.
Yeah.
Okay. I think father and son.
Yeah.
I don't think brothers. Yeah. So essentially, if you want to have 2 people physically getting that mortgage, you've got to be a husband and wife is the easiest way to do it. And obviously that happens a lot. Okay. But if it's 2 friends just buying a place together, you can buy it together, but you can't mortgage it together.
Family and husband and wife.
Yeah.
Right. So I've recently question that I get asked quite a lot.
We always do this. I get asked this question all the time. People must think, do you?
I get asked another question. So in the UK, you could have a vehicle to purchase a property, right? And utilize a mortgage on that.
Yep.
So you could purchase a property under a company name,
right,
and utilize the mortgage,
right,
for tax benefits and so on. Can you do that here?
No.
Okay.
Okay. So here it's very much on your personal name.
Okay.
All right, so it's not on the business name; it's under me going to get that mortgage. We do get that question a lot as well, because people do have businesses that they have, and are, oh, can my business buy it? No, it's going to go. You're the one that the bank's going to look at to repay that mortgage.
Well, I think we know the basics now of mortgages.
Yep.
You know, I would say a lot of our clients could be eligible for a mortgage through you. Well, if any clients are interested in,
Yeah, if anyone's interested, they can get in touch with you. They can get in touch with us. You know, we'll happily come to the office, sit down with them, explain in more detail exactly what they need. We can even take some documents here. We can get them pre-approved. We can do whatever you need to help your clients.
amazing. Thank you so much.
Thank you very much.